I see many and many people, more and more people, they are joining us, and that's fantastic. Also, Paul join us. Hello, Paul.
Hello there, Theo. How are you?
I'm very well, thank you. And yourself?
Yeah, all the better for seeing you here.
Likewise. Okay, guys, before I pass it on to Paul, to go through the price action trading and all the necessary stuff you need to learn in order to develop yourself as a skillful trader and successful in the field. Just to for those who join us for first time, Paul has incredible amount of knowledge and experience in the market, and for me, knowing what Paul is capable of teaching you and educating you, it will be for me just a gift to yourself that you are on this webinar today to listen from and learn from this exceptional trader and investor. So before I pass it on to Paul, I would like just to make sure you are on our social media first. This is our YouTube channel. I will share the link below. So if you scroll a little bit down and you come to the trading spotlight area, you can see that all the recording webinars from Paul, Yen, and myself are located here. So you have the opportunity to see them as many times as you need in order to understand and get the value. Also, if you scroll down, you can see the live trading I do on a daily basis at 7:30 GMT time for 30 minutes. We go through the market analysis, and if we find some trades, we take them as well. So please make sure you subscribe to that. And then we have the Admirals Telegram channel. It's the place that you're going to get all the information about the stocks, about the indices, about the currency market. When we do podcasts, when we do some live, some reels, we always put it here. So you're never going to miss out on this. And then we have the Instagram page. So here we put a lot of content on a daily basis. We uploaded stories, reels. Here is Paul, and some trading ideas about stocks. So I will definitely encourage you, make sure you follow us on Telegram as well. I'm quickly sharing the links with you guys. And then I will pass it on to Paul. All right, Paul, I will pass it on to you so you can share your screen.
Super.
Okay. Excellent. So thank you so much. Have a great session, and bye from me.
Cheers. Thank you, Theo. Thank you. Hello, everybody. Great to see you all here. Thank you for the introduction there, Theo. Let's just bring up the slides so we can start properly for today. So as I said, welcome everybody. Great to see you all here for what is going to be session 3 of talking about a kind of ultimate price action trading guide. And as the name implies there, we're going to talk about identifying a trend, something that is quite simple, but ultimately fundamentally important to us as well, any kind of trading, but certainly when we're doing price action trading. So what we're going to talk about is, the kind of the big picture of building a price action trading plan, but within it, we'll sort of just build upon the sessions that we've done and, the couple of sessions we've done so far. As always, I appreciate that we have a broad range of experience of people here who join us for our sessions, from complete beginners to very intermediate and advanced traders. You're all very welcome. It's great to see you here joining us today. You're actually very welcome to put your questions into the chat box, or if you're watching this later on the Admirals On Demand channel here on Facebook or YouTube, by all means, put it into the comments. If you're liking the sessions, give us a thumbs up. Okay, if you've got comments and thoughts of stuff you'd like me to add in, please, by all means, we'd love the feedback. And also, as I said, I appreciate, even though these are the English webinars, we recognize we have a truly global audience here, okay, for Admirals. So, wherever you are in the world, it's great to have you joining here. We hope that you're out well. We hope that you're safe. And we hope that you are making the most of what has been another eventful year, shall we say, ladies and gentlemen, all of which brings us opportunity when it comes to trading in markets. So remember, here we are, Admirals, a Forex and CFD broker with a wide range of instruments to trade, global presence, but with also local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and also allowing the opportunity to engage with markets, utilizing both MT4, MT5, and also the Admirals Supreme Edition. If you have any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So what are we going to talk about today in the guts of our session? Well, as always, because we're into this new session, we'll talk a little bit about what is price action trading. As I said, I realize we have new people here, completely new to trading. We'll hopefully just build up your knowledge and experience. With that, we're going to talk a little bit about support and resistance today. And we're going to talk about, well, how does that actually help us identify a new trend? And how can that help a new trader? And then what we'll do is we will switch across to the live markets to have a little look at what's going on in, this afternoon. I appreciate that it's always great to have the education elements, but it's when you sit and switch and look at the live markets that maybe sometimes that's what helps make it click into your own mind to understand what it is we're actually particularly looking at. And as I said, all of these sessions are about building upon each other, okay, and sort of just adding a little bit more layer by layer every week so that, you just become the best price action trader that you possibly can be. For those of you who don't know me, my name's Paul. I've traded for many years, okay, traded for funds, for clients, okay. Primarily, I like to focus on FX indices and commodities. And whilst we will focus on a lot of those, we'll also take a look at equities and fixed income, etc., okay, as during this particular session. For longer term trading, I tend to be a trend trader, and that's a key and important element of what we'll talk about today. And my shorter term trading, my intraday trading, tends to be reversals and mean reversion, which is, another topic for another day as we go further deeper into this particular series. So, Paul's Ultimate Price Action Guide. So, as the slide says, today we're going to continue this new series based on helping traders understand and utilize price action in their trading. It is very easy, okay, for beginner traders to be intimidated by the amount of knowledge required to be able to analyze markets. And that's nothing new, okay? If you're new to trading and you're finding a little bit intimidating, a little bit overwhelming, that's okay, all right? That's okay. Don't be beating yourself up on that. That is perfectly natural, right? But what we're here to do is using price action is a little bit of education with that. It's just help you, okay? Make it a little bit simpler, okay? A little bit easier for you to be able to analyze and understand markets. So each Wednesday, what we're going to do is we'll build upon the previous session so that you're educated and informed how to use price action in your trading so that you can go about and engage in all markets. And I truly do mean that, in all markets, okay? As I said, I like to focus on FX indices and commodities for me, but I appreciate that we actually have, people here who trade a wide range of trading instruments, and they'd be interested in things like cryptos and things like fixed income, equities, etc. And that's absolutely fine, because the concepts that I'm sharing with you, the ideas I'm sharing with you, will work across all time frames and all instruments, and that's where I want us to focus on. So, because we're just a couple of sessions in, what is price action trading for those new joining us today? Well, I would define it as a basic means of market analysis using price movement over time. It is popular with both retail traders like ourselves and also institutional traders. And we're analyzing the change in price over time. That is the action, okay? As the price moves, that's the action. And that's what we're looking to work with, and that's what we're looking to identify. What we will be doing, for the most part, okay, is to give ourselves a little bit of a boundary, is that we'll be typically focusing on price action over the last 3 to 6 months, but also respecting longer term price movements. So what we're going to be doing is, I recognize that a lot of the people joining us here for the sessions, okay, they're probably trading around their existing life commitments, okay, maybe your job, maybe your families, maybe you're a carer, maybe you're traveling, okay, everybody has their own kind of lifestyle commitments. And what we're going to do is, I'm going to focus in terms of my time and energy on trading and looking at the longer term time frames, so monthly charts, weekly charts, daily charts, and 4-hourly charts. But the important thing is that, as I said earlier, the concepts, understanding price action, well, then once you're able to do that, well, then invariably you can utilize that across all time frames and all instruments. So whether you're a monthly chart trader on gold, or you're a 5-minute chart trader on euro against the US dollar, the ideas and concepts that we'll share with you, they are applicable across all the time frames and all the instruments. And that's what we want to do. We want you to be able to be, as you've probably heard me talk about before, to be a versatile trader, to trade any instrument in any direction on any time frame. That's where I ultimately want you to get to as a trader. And price action is a very simple and it's a very good way to start, because if you can start to learn to understand and to read and accept price, well, then you can trade. Okay, you can trade. Lots of new traders will make things more complicated than they need to be. And in fact, actually, all that happens is, as I said earlier, it leads to traders being a bit overwhelmed. They get a bit intimidated. Okay, then they make poor choices. Let's just keep it nice and simple, right? Let's keep it nice and simple, and let's just basically let our, identify good trades and let our trades play out for us. So, what have we learned previously, okay, in the sessions? Well, in session 1, we had a look at intro into price action trading. Session 2, okay, we had a look at the engulfing candle. It's a candlestick trigger that doesn't set up very often, but when it does, it's worth taking note of. And you will find that these videos, as my colleague Theo showed, they are all there on the Admirals YouTube channel. They're there on the Admirals Facebook channel there as well. You'll be able to even tap into them on the Telegram channel. So be sure to do that. What I'm going to be doing is every week building up, but I'm going to basically change it up a little bit a week, keep everybody on their toes, keep everybody interested, a little bit. Some weeks, okay, we'll be doing, bits about analysis. Other bits we'll be doing about trade triggers, okay, what trade setups. We'll do bits on risk management. We'll do a little bit on managing yourself as a trader as well. Okay, what is it the thing that you need to be aware of when you're looking to the trader? But today we're going to talk about identifying a trend, and this is crucially important. Okay, it's crucially important for us just generally as traders, but specifically also when we're looking at trading with price action. And so that's what we'll touch on today. So let's talk about the big picture first. I like to think of markets moving in phases, okay? 2 parts to those phases. And as I said, for a new trader, I don't expect you to completely understand and pick that up. We're going to go into how to do it a little bit better in a couple of slides' time. But what I'm just doing is this is the big picture and understanding phases of markets. The first phases of the markets, okay, are quite simple to understand, okay? Part 1 is quite simple. Namely, that you're either looking at a chart that is in a downtrend, which you can see there, or maybe a chart is in an uptrend. I have to apologize my drawing there. I'm a better trader than I am an artist, ladies and gentlemen. Or alternatively, a market that is going sideways, okay? As I said, let's keep this very, very simple. We'll go into more depth in it in a few slides' time, but let's just keep it very, very simple. There's a couple of things we need to take on board here. Everybody likes to see a good trend. We do. The truth is, though, markets do not trend as often as we would like. Markets may only trend 20 to 30% of the time. So that requires you an element of patience to wait for a good trend. A lot of the time, okay, markets are like this. They're going sideways. They're consolidating. And that's okay. That in itself can offer up trading opportunities, which we might look at in a later session about just range-bound trading. But ideally, what we are looking to identify is, as I said, markets that are in a good downtrend or in a good uptrend. That is what we're looking at. I'm going to show a little bit more about that in a few slides' time. As I said, they don't happen as often as they do. The thing you will have heard me talk about pretty much every week on sessions here at Admirals is that good trends leap off the chart at you, okay? You do not need to force it. If you find yourself having to turn the chart and getting your face up really close to it to try and just convince yourself that it is a trend, let me do you a favor. It probably isn't, all right? It probably isn't. Good trends leap off the chart at you. The challenge is they don't happen as often as we would like. We would love to have trends all day, every day. That is not the case. But when you're trading longer time frames, monthly, weekly, daily charts, well, then, you're in a position to go looking for where those trends exist. What you'll find is that there's a certain number of instruments that you will look at, that you will trade well, that will resonate with you. But if you're a trend trader, you'll be looking to sort of basically, identify trends. And it doesn't take very long. As I said, a good trend leaps off the chart. You don't force it. Don't feel that you have to force it. Because if you do, the reality is it's probably not a trend. And it probably means that your trade is probably not going to be the greatest. So big picture, that's phase one, right? Understanding the phase, part one phases. The more complicated, okay, and the more experienced traders, and I want to be able to share with everybody, is that the second part of phases of markets. And for me, the second part of phases of markets is about transitions, all right, about transition. And this is where in this particular case, we are transitioning from a downtrend to an uptrend. Price is in a downtrend, price collapses, and then basically price starts to effectively transition. And what happens is it maneuvers, okay, and it's transition from a downtrend to an uptrend. Once again, for new traders, I don't expect you to be able to identify that straight off the bat. This is something that comes with a bit of practice, something that comes with just doing your analysis on a daily basis. Alternatively, we might have a transition from an uptrend to a downtrend. Price has been in a very, very nice uptrend there, okay? Price basically breaks the last high, and then actually what we see is that price sort of transition, it changes, it rolls over and falls away. And so price has transitioned from an uptrend to a downtrend. Now, that is something that, as I said, comes with a bit of experience. Trees is asking a question: does each price that form the candle represent the price at which a seller or buyer occur? So what we're looking at, Trees, is, when we're looking at the candlesticks, and I will do a session just on specific candlesticks, what you'll find, my charts, I have a green bullish candle and I have a red bearish candle. So a green bullish candle basically means that, the buyers are in control. Once that candle completed, that is, if it's a green candle, that means the buyers are in control, okay? The price closed higher than it opened. On the flip side, for a red candle is a bearish candle, and basically that means that when that candle closed lower than it opened, so it's actually the sellers who are in control. Now, there are lots of people who like to change the colors of their candles. Some people like to have all variations of colors. That's absolutely fine. I don't get too caught up on how you label your candle in terms of whether you have it red or green, so long as you understand it yourself. But what is important is just to understand, okay, who is in control of that market when that candle completes. The interesting thing for here, and one of the reasons I put it on here, let's just clear down these drearing parts, sure, is that for both of these charts, okay, there is no timeline on there, okay. Then that those charts, they could be a monthly chart, they could be a 1 minute chart. The important thing is that it's recognizing as those candles complete, regardless of the timeline that you're trading on, that it is you're able to sort of read and understand, okay, what that candlestick is telling you. If it's, for me, if it's closed green, all right, that means the buyers are in control. It closed higher than it opened. If it's red, okay, it closed lower than it opened, all right. So basically the sellers are in control. And it is about recognizing and understand that relationship between the different candlesticks, between the buyers and sellers, and also where it's happening in terms of price over time, and also where particular levels. When we start to pull this together, Teresa, that is what becomes the confluence of events that allows us to start to identify possible trade setups. So I hope that just gives you a little bit of insight. We're going to cover lots of these over these sessions every Wednesday, just building every week, just to basically help you build your knowledge, your understanding, how to get a little bit sharper, a little bit smarter. I'll be just passing on a few of my kind of, let's say, street smarts, okay, from trading for a long time, just to help you increase your knowledge. But a great question. Thank you, Teresa. And as I said, you're all very welcome to fire away with questions, okay? So those are the two phases of markets. And as I said, understanding them will actually help us as a trader. And one of the ways we start to do that is by understanding support and resistance. Now, support and resistance is, it's as old as the hills, really, in terms of a concept. And the reason it is old as the hills is because it works, because it gives us an indication of the kind of the momentum and the markets itself. The important thing when we look at a chart, and once again, I don't care if it's a monthly chart of Bitcoin or a 5-minute chart of the DAX. What you will see when you look at a chart is that price never moves in a straight line. Okay, it never moves in a straight line. It always got a bit of a zig and a zag where it tends to move between price levels, not always, but it tends to. The important thing and interesting thing for us is that those are levels that humans remember. Even in this modern age of algo trading, those algo programs have still been effectively programmed by humans, and humans, we remember levels, we remember numbers, we remember dates. And those kind of levels are known as support and resistance, with support being the floor and ceiling being the resistance. So here we go. What we have here, as I said, price doesn't move in a straight line, because what will have happened here, price will have moved up. Price has been in an uptrend. There will be people here, okay, who the price has gone enough, and they'll say, do you know what, Paul, I'm going to take my profit from my trade. I was a buyer, now I'm a seller, and actually price drips down. Price drops down there. But what happens is price comes to a level where all the traders who've been sat on the sidelines, who missed this move, are now saying, do you know what, this is a good price for me to buy. So actually, I'm going to buy here, okay? And what happens is all those buyers pile in, price goes on up, it breaks the previous high, gets up to here. Once again, people will be thinking, do you know what, this price has gone far enough. I think I'm going to take some profit here. And they do, they take some of their positions off the table. And what we see is that invariably price drifts down again. Once again, the people who maybe bought here, or the people who bought here, or even the people who are just still waiting to buy, are basically looking to buy in. And then invariably what happens is we start to push price again, as that we have that momentum. So, this, as I said, the price doesn't move in a straight line. So, when you're in a trade and you're a new trader, you can sometimes see the price come back against you, and new traders, they get a little bit scared, they get a little bit, excitable, okay, they get a little bit worried. Just have to realize that, okay, it's part of the ebb and flow of the market, okay? The market never moves in a straight line. There is always an ebb and a flow. And part of your job is about being able to analyze and recognize where that ebb and that flow is likely to occur, so that you're in a position. And what helps us is, because, what we're really looking to do is, as trend traders using price actions, to keep it very simple. When we identify that we're in a very clear uptrend, well, we are looking to basically to be a buyer at support. That's actually what we're looking to do. That's what we're looking to try and be, a buyer at support in an uptrend, a seller at resistance in a downtrend. You could just literally, you could put that in a little box, and that could be your overall strategy. And then, you drip down into it to have little tactics, but generally we want to identify a trend, and in an uptrend, we want to be a buyer at support, and in a downtrend, we want to be a seller at resistance. We just keep it as simple as that to start with our price action trading. That will help us as new traders. So what we see is that support, the floor, and resistance, the ceiling, they manifest themselves on our charts in various ways. So you might see people drawing in trend lines. You might see people using moving averages, which we'll do a piece on there, which is effectively almost like a dynamic support and resistance level, which I'll explain more in another session. But what we'll also talk about a lot is just drawing in horizontal levels of support and resistance, and also big round numbers, big psychological numbers, numbers that have got double zeros, treble zeros. These become particular levels. Remember, it's levels that markets remember. And it's when they remember, that's what we look to see, well, actually, what goes on there. It is important for you as a price action trader that you can find those levels on your charts, as they will help us time our entry into trades. They will give us ideas where we can place our stop loss, and we'll do sessions on risk management in the future. And it also gives you a potential profit target on your trades, okay, as to where the trade might particularly move to. All of these things will help you with your timing of your entries, okay, which can be very crucial to success as well as your exits. Get that timing right, and it keeps your risk low, and the opportunity, okay, to generate good trade returns, that just improves that. And I appreciate if you're a new trader, that might just be a little bit more on that slide, but bear with us. What we're going to do is we look at charts. We'll start to explain it even more depth for you. So, when we're looking to see if identifying a trend, as I said earlier, just take a moment to look at the chart. Is the price continuing to go up? Well, then that chart is an uptrend. And if it's in an uptrend, we want to look to be a buyer, preferably at support. And that is keeping it unbelievably simple. As I said, new traders, they get excited by all the possibilities there, and actually it's very easy to become overwhelmed. And what we want to do is just keep it simple, keep it easy to begin with, all right? Don't make things harder than it needs to be. And one of the ways we can do that in identifying a trend is starting to identify the price momentum, things like higher highs and higher lows. What does that imply? What does that actually mean? Well, as it says on the slide, an uptrend is defined as a series of higher highs and higher lows. So, when you're just looking at it as a bit of a line chart, every high, okay, every high should be higher than the preceding one. Every low should also be higher than that, okay? Higher highs, higher lows. When you hear me talking about that, that's an indication that, we are in an uptrend. And remember what I said, if we're in an uptrend, we're looking to be basically buyers at support. That's what we're looking to do as part of our overall trading method. And if you look at it in candlesticks, well, you're looking at it there as we go, and you can see we're getting higher highs and higher lows. That's what we're particularly looking for and to identify. Sometimes it's very pretty, other times it can be a bit scruffy. As I said, once again, this could be a chart of a 5-minute chart. It could be a monthly chart. Doesn't matter. This is the great thing about price action trading, is that it's fractal in the sense that it repeats itself, okay, on time frames, on instruments. Once you're able to read and understand things like price action, you're able to sort of trade anything. You can become that versatile trader, which is what I want for you. On the flip side, okay, is there a downtrend? Take a moment to look at a chart, and we're going to look at the live charts in a moment. Anyway, is that price going down? Well, then that chart's in a downtrend, and we're looking to be a seller. We're looking to be a seller at resistance, now at the ceilings, okay? That's what we're particularly looking at. And once again, we're going to be looking at how we define that trend. Define that trend by basically a series of lower highs and lower lows. The exact opposite of an uptrend. Let's bring up the drawing tool here. We can see that, as price goes down, remember, price never moves in a straight line. There's always a bit of a zig and a zag there. And every time it's making a new low, that's just confirming that we're in a downtrend. Every time it pulls back, okay, and we get each high is lower than the last one, that's just confirming that we're in a downtrend. Remember what we're going to be looking to be doing. We're going to be looking to be sellers, okay, at resistance in a downtrend. And that's it. Keep it simple. Don't try to overcomplicate it. Don't try to sort of make things harder than they need to be. People do it. I have been guilty of it myself in the past as a trader, ladies and gentlemen. You think, well, we need more indicators, I need more data, we need more this. Actually, you don't. You don't. Actually, normally less is more. Just keeping it as simple as you can will help you make your choices. I put in a bit of a scrappy chart here, okay, because that's what real markets can be like. But once again, we're getting lower highs and lower lows, and that is just confirming we're in a downtrend. And if we're in a downtrend, we want to be a seller. If we want to be a seller, preferably we want to be a seller on a pullback, okay? We want to be a seller on a pullback to resistance. Let's keep it nice and simple, ladies and gentlemen. Let's not try and be a smart aleck, as we would say here in the UK. Okay? It's about taking good trades. That's what we're looking for. So what we look for, okay, in terms of our step one, when we open a chart, and once again, it doesn't matter what it is, what we should be doing is always defining levels of support and resistance on our chart. And those of you who've joined me over the year or so of doing these sessions, I've always talked about that. As soon as you open a chart, start defining those levels of support resistance. Markets remember them, okay? Markets remember them. Look at the monthly, look at the weekly, look at the daily chart, and draw in horizontal levels of support resistance. And you can also use psychological round numbers, 120, 140. The pound against the New Zealand dollar today tipped up to 2. The euro against the US dollar tipped up to parity at 1. Okay, those big psychological numbers, markets remember them. For new traders, you can also use fractals. Don't worry about fractals at the moment. I'm going to do a session on that down the road. Okay, as I said, they'll just help. But what we want to do is step 1, just define levels of support and resistance on our charts. If we're doing that, that's the first thing we need to be doing. That will help us in terms of becoming a better price action trader. So that's step 1. Define levels of support resistance. Just get on there. Just draw them on monthly, weekly, daily. I'm going to do it in a moment myself here. We'll go across to the charts. And step 2 is define if there is a trend. Okay, if there is a trend, can we identify whether that chart, whether that instrument is trending or consolidating? Okay, whether it's going sideways. Remember what I said at the start of the session, ladies and gentlemen. Okay, markets don't trend as much as we would like. They only trend maybe 20 to 30% of the time. Secondly, good trends leap off the chart. You don't force it. Don't feel you have to force it, okay? Because if you are, it rarely works out well, ladies and gentlemen, okay? Good trends leap off the chart. And we'll have a look at the live markets and have a look at some charts in a moment. So, what we can see here, and this is a bit of, it's a bit of an old chart, but it's a clear chart because remember what I was saying, good trends leap off the chart, and that's what we want to see. This is a weekly chart of the DAX, and we can actually see here for about, about 4 months, actually price just went sideways, didn't it? Price just went sideways there, just literally, it was just batting back and forth. And there will be many people who could happily trade range-bound markets like that, and that's fair enough. We'll do a little piece on that in the future. But what we saw was eventually price broke out very strongly, and we are back into our uptrend. We're back into our uptrend, and what do we get with our uptrend? Well, remember, we're getting higher highs constantly. Each high is higher. Each low is higher also, getting higher highs, higher lows. Remember what I said, a good trend leaps off the chart at you, okay? It leaps off there. That's telling you that that market is working its way higher. So we don't want to fight that, all right? We don't want to fight that. We want to basically ride it. Think of it, for those of you who are active, okay, think of it like, you're trying to surf a wave, right? This is the wave coming in. We want to get on board there. We don't want to fight it, because if you've ever tried surfing, and I have done, and I'm a pretty rubbish surfer, you learn very quickly that if you try to fight the wave, then invariably there's only going to be one winner, and it's probably not going to be you, ladies and gentlemen. You want to basically get in line with the surf. You want to basically look to surf the wave. You want to basically let the wave do the heavy lifting, right? Actually sort of run you into the beach. And it's the same with a trend trader, right? You want to basically be able to buy at support, so that basically the price movement is what takes you towards your particular targets. So, lots of people, you'll find lots of people will use that as a, analogy, okay, all right, in terms of, understanding that, think of yourself like a surfer. You're always looking to surf the good waves. And, on the upside, this is a monthly chart of gold, okay? And the reason I want to put this in was just to basically, as I said, we're looking at markets being either trending or consolidating, and sometimes they're transitioning. Now here, the thing that's interesting here, this is the monthly chart on gold, okay? And actually you can see there, I'm hoping you can see that there, the price basically, what were we doing? We were in a very clear downtrend there, weren't we? Each high, okay, each high was lower, each low was lower. But then actually what we see is that for a good part, and excuse my drawing there, for actually what was effectively almost 5 or 6 years, all right, we effectively just kind of went sideways there in gold, and that can happen, all right? This is a monthly chart. Now, of course, you can break it down and there'll be smaller moves, okay, within that you could trade, but that market was in a downtrend until we see it transition to an uptrend. How did we start to get an uptrend? Well, we know we had a low here. Then what do we have here? We have a higher low here. And then what we've got here, that breaks out. It breaks out of these highs here where you've got the fractals. And suddenly we've got higher lows, higher highs, and we're away, okay, and we're off. And that's what we, we're looking at and trying to identify with price action trading. Now, I've given a very extreme example there that occurred over years, okay? But once again, that could be a 5-minute chart, all right? That could be a 5-minute chart of gold where price does that, okay? And a part of that is about recognizing it and aligning yourself with the kind of time scales that work for you in particular. I just want to show the big picture so that you can see that, regardless of the instrument, regardless of the time frame, this will happen time and time again. So let's switch across to the chart, shall we, to have a little look at this in live action. But just to take a few points away before we move on to the charts, many new traders overcomplicate their life by trying to trade complicated trading strategies. I have been guilty of it myself, ladies and gentlemen. Most of us are. Men in particular tend to like to overcomplicate things, when in fact, actually following a simple plan would help them more. And in that case, just learning to understand and how to trade price action can help you enormously. What I want you to remember from these sessions is this one in particular: price never moves in a straight line. It always moves in a bit of a zigzag. And those zigzags can actually help us define levels of support or resistance. Support being the floor, resistance being the ceiling. That in itself can help us define if there is a trend in place. Just remember, markets never trend as much as we'd like, only 20 to 30% of the time, but a good trend always leap off the chart, okay? You don't need to force a good trend. It will leap off the chart at you. Don't ever try to force it. And the good thing about understanding all of this is price action is that it can be used across all instruments and all time frames. I don't mind if you trade Bitcoin on the monthly or, gold on the 5-minute. Once you understand price action principles, you'll be able to trade and become that versatile trader. So should we have a little look at live markets, ladies and gentlemen? Let's move across there. Just before we do, just remember the next session will be next Wednesday, okay, in the price action guide. What I'm going to talk about there is I'm going to talk a little bit about a trade trigger. I'm going to talk about star formations, all right? So I appreciate some of you, if you're new, you might say, well, what is a star formation? That's why you should come to the webinar, ladies and gentlemen, because you learn them. Where do we find them on our charts? How do we trade them? All of these elements will just build up nicely into a price action trading plan that you can take away and utilize yourself. That's going to be next Wednesday, 12th of October, 2 o'clock London time. Check your inbox for the webinar link or head over to the website to sign up. And as always, you can contact Admirals, okay? You've got the contact details there, okay? Give them a shout if you've got particular questions or thoughts or particular comments themselves. So, bear with me a moment, and why don't we switch across the chart and have a little look at what's going on there and just build in what we've discussed today. So just bear with me 1 second and we'll switch across the charts for the last few minutes. Okay. Excellent. So here we are. I'm hoping that you can still hear me. I'm hoping that you can still see me. I'm hoping that you can still see the slides as well. I'm just going to move my video piece over here so we can do it. And this is the Admirals MT5 platform here, okay? And what I'm going to be doing is I'll be utilizing both the MT4 and MT5 platforms, okay, to give people the opportunity to see how they operate and how they work. I've got gold up here, all right? This is the gold chart. And remember what I was saying is that bang, the first piece I'm going to be doing is once I open up a chart is trying to identify some of those levels of support and resistance. And I'm hoping that you can see some of this here, okay? This is the monthly chart. It's been going on for a long time. And really all I'm going to be doing is just very quickly identifying, okay, some of those levels of support resistance. What I like to tend to do is, I'll start at the kind of the lows here, okay? And I've just drawn them in there on the monthly chart. Let's just pull these down a little bit here. What we can do is we'll tighten them up. I also will start at the actual ultimate highs here as well, okay? Just to basically give myself an understanding. We can see here that, prices come up to these highs here. But I'm also just looking at where are the particular straight levels, okay? Where are the levels where prices reacted to? See how price reacted to there? And I'm just keen to just draw them in, on the monthly chart. It doesn't have to be super accurate on the monthly chart, because as we go down, what we'll start to do is we will start to basically to tighten them up. This is just about us understanding some of those particular significant levels of support and resistance where prices bounced off it. I'm also going to put in one here on a big round number here. So just bear with me. Let's just bring that up there. Bang. What I'm going to do is just make this a little bit different, just so we can see it's a little bit different for us. Okay. And the reason is that I'm going to put this in at a big round number. So push. So I'm hoping you can see that there. And what I might actually do is I might just put one in at around about 1,000 as well. Okay, big round numbers. As remember what I was saying is markets remember those big round numbers. They do them. There's quite a few of them on gold, which we'll look at in a particular moment. So there we go. I've got my monthly. I've just drawn in horizontal levels of support and resistance. I'm going down to the weekly chart. Let's just bringing it because actually what I want to be able to do is just to add in more of that. And instantaneously, what I'm seeing here is that just a bit more lines, okay, that are of interest to me. So straight lines, and I appreciate I can draw these on quite quickly because I've got experience, but what I want to see is, where have been areas where price has kind of maneuvered, all right, around, where has price pivoted off that particular level, and you'll see that will occur. What you might also notice here is that, we can see that price was in a very clear uptrend on that weekly chart. What happened to it? It hit 2,000, big round number. That became the ceiling. Price dropped its way down, back down here, okay, to these areas before it rallied itself up again. What happened? It gets up to 2,000 again, big round number, before it rejects it and drops down again. And this is part of price action, is just drawing in those levels, support, resistance, constantly doing that. If we go down to the daily chart, we can start to sort of identify what are we particularly looking at. So, and here we go. So, what I'm looking at here, remember, for most of our trades, okay, we're going to be focusing on the last 3 to 6 months, but we want that big picture. But what can we see here? If I just zoom in a little bit, based upon what we've talked here, let's just move these out of the way a bit, and let's just give ourselves a little bit of room for maneuver, shall we? Here is the price, okay? Now, remember what I was saying here is that, a good trend leaps off the chart at you, all right? You don't need to fight it. And if I look at here on the daily chart, let me just give up my drawing tools again. Is that, remember what we talked about? Price hit that big round number at 2,000, and it actually put in what's called a tweezer formation, which we'll talk about later. It came back down, it tried to bounce up again and hit 2,000, and it got rejected. And then we saw price started to move. Remember what we were just talking about, okay? Trend, right? What we need is basically lower lows, lower highs. Price pulls back a bit, which you'll learn about, okay, in terms of patterns. But once again, it just can't really get any particular higher. And then we see price continue down again. And price here, what's it doing? It's making new lows, Each of the highs, okay, is lower. Price comes back down. It hits this level here, okay, a level we've drawn in, puts in what's called a key reversal, which you'll learn about. Price rallies up to this area again, all right, around 1,800, where there's 50 period moving average, which we'll touch on. And then basically, but what has happened there? That high is lower than this high, it's lower than this high, it's lower than this high, it's lower than this high. We can see that, once price continues down, breaks that level, we've continued in that downtrend. Now, what we've had over the last couple of days is a bit of a pullback, but this is looking as, at the moment, this is still a pullback in a downtrend. Remember what we're saying. Let me just clear these off, okay? Let me just clear some of this, all of these drawing signals is that, what we're looking for is once we can identify a trend in a downtrend, what we are looking to do, okay, we are looking to be sellers at resistance. That is what we are looking to do. It's about identifying that. I wonder if I can just draw up it might be actually just easier if I just draw in, there we go. We can hopefully, let's just see, can I double that? Let's just draw in here again, bang. I'm just going to move that one down there a little bit. What we can see is that has been in a very clear downtrend since February of March, having hit that high at the big 2,000 number. We've seen that euro dollar has been in a downtrend, and that's just price action, just telling us that we're making higher highs, or in this particular case, making lower lows, lower highs. Remember what I said: good trends leap off the chart. You don't need to fight them, okay? You don't need to be sort of pushing it. You don't need to be forcing it, okay? When we identify that, well, what we're looking for is, well, once we've identified a good trend, in a downtrend, we're looking for places to be, okay, a buyer at resistance, all right, a buyer at resistance, okay, or in an uptrend, a buyer at support. We're looking to basically trade the resistance levels here as we play down. So that was just particularly on gold at the moment, okay. But homework would be to just take away and just to go through the charts, start to set up some of your favorite charts, draw on those levels of support resistance on the monthly, the weekly, the daily, just identify them and just basically just start to identify, is there a trend? Good trends leap off the chart. Don't force them. When there is a good trend, well, look and see, how does that price pull back there? Does price pull back to resistance in a downtrend? Does price come back to support in an uptrend? And that's what we will particularly look at. And as I said, week by week, we're going to start to build onto this so that you have a way to actually make it a bit more structured so that you can trade yourself your way through that. So there you go, ladies and gentlemen. Unfortunately, we've run out of time there as always. I'm trying to sort of just push as much as I can to you and trying to share with you as much as you possibly can. So remember, in that ultimate price action trading guide, okay, step 1, open a chart, draw on your levels of support resistance, because market never moves in a straight line. You can understand where the zig and the zag, the ebb and the flow is going. And then we're in a position to step 2. Can we define, is there a trend in place? Remember, it only trends 20 to 30% of the time. So a lot of the time it won't be, a lot of the time it might be, going sideways, and that's okay. Just don't try and fight it. And then what we're looking to do is, if we're identifying trends, just basically, identifying that we're making higher highs and higher lows in an uptrend, lower lows and lower highs in a downtrend, and looking to identify, areas where we'll go into more depth, where we want to be a buyer at support in an uptrend, a seller at resistance in a downtrend. Let's keep it nice and simple, ladies and gentlemen. So I hope you found that useful. I hope you found that helpful. As always, I wish you the very best of success in your own trading, ladies and gentlemen. I look forward to seeing you next Wednesday when we'll talk about the star formation. Until that time, trade well, everybody. Cheers.